Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Wednesday, the 26th of August, 2015. Hope you're having a good trading week. We had another good day. Started out slow after a gap up, but had some stuff in the afternoon that worked really well. And we did sell off again and actually closed negative. We'll look at the intraday action in a moment. A couple comments first on the daily chart. This is the daily chart of the ES front month futures contract, so basically the S&P 500 that we track. People talk about how sharp this has been, and no doubt it's been a sharp decline. But what's interesting to me, it's always a mental thing for people, right? If you look at this, we were talking about how flat the year was, all over and over and over, focused on everything from January and especially from March until the last week or two. So narrow on the S&P and on the NDX2. We kept hitting that 20, 60, 250 magic number on the ES, and then the sell-off comes. But what's interesting is you don't have to look back to the before this chart to see last October and how quick the rise was from basically, let's call it 1820, which we almost got to here, back up to about 2020. Happened in about 2.5 weeks. And it's always interesting to me when people talk about this decline being so sharp, but at the same time that rise was pretty sharp and we've been flat in between. This isn't a crash yet. That's my point. People keep talking about this being this big meltdown. All this has done is taken us back to where we were not even a year ago. Percentage wise, no big deal yet. So, when people talk about, oh, is the crash over? There's no crash yet. There's no capitulation. We talked about that last night. And we know we've just gotten that monthly signal earlier in the year, and that was a sell signal that is finally coming to fruition, which has a much deeper, lower target from the move, which would be about 1340 on the ES, which is still several hundred points lower. So having said that, we gapped down on Monday, we rallied back a bit, and Tuesday we gapped up. We'll look at how flat that was. But if you look at this daily chart now, we're kind of forming a bear flag, and I think that's where people should start to be concerned. So after gapping up quite a bit and holding up for a lot of the session, pretty flat until the last hour or two, the S&P lost 25. The NDX was up really well with Apple, but ended up closing down 22. The SOX lost 7 points, which isn't a huge deal for the stocks. The biotechs were actually up 15.36. They've obviously sold off quite a bit in this move. Google lost 5.5 points and still keeps it pretty high compared to where it's been the rest of the last year. And Apple was up 62 cents, which is not much. Pretty much a wild ride on Apple, hitting $92 at one point very briefly Monday morning, and then all the way back to over 110 at the open on Tuesday, only to retreat back under 104 for the close. The VIX down 4.72. Obviously, today was a less volatile day. Even though we did get over 40 on the VIX and got a close there, this to me does not look like an extreme reading yet. That means bottom. Crude oil, very interesting. 38.25 for the close, down for the session. Once again, gold was down 13.5. The trend closed at a very high level of 3.38. That brings the 10-day moving average of the trend to 1.61, the highest reading we've seen in a long, long time. And the advanced decline ratio started out very positive and ended up almost break even. Plus 26 on the NASDAQ, more stocks up than down. NASDAQ volume was down back a bit today, 2.4 billion shares basically, after hitting 3.2 on Monday. So the really important part is, let's look at the intraday action. So you can see the Monday, the gap down and the rally, and then kind of a rollover, but then a bounce back late in the day. Remember that the last three candles on the futures occur after the stock market closes, so we were down a little bit in the aftermarket. And we gapped up on Tuesday morning, and we were talking all day about it being a measuring day. And in fact, it put us right in the middle of the value area for most of the session, which is this gray area right here. Look how much time we spent exactly at. This is so important for people. This is why we talk about people who trade futures are better stock traders. It's so important because this was telling you so much about the market. We had gapped up to the value area high. We couldn't get through that level. And then we had lower, and look at how just over the middle of lunch, the low of the session is the value area low up to that point. That's all very neutral. That's a measuring session at that point in time, and to know where those levels were coming in is very critical to your stock trading. And then, of course, we hit finally the last hour, and we broke that, headed lower, filled the gap, and closed basically at the lows of the day, and then three more candles after that for the future session. So Again, a negative session and a real selling at the close, much more real, in my opinion, than what we had seen the prior day, which was really net buying. So this is a big negative for the market here. Anybody that thought this was over, no, this is not yet capitulation either. But it's certainly, I felt like this was a much more negative day overall, even though we gapped up and spent a lot of it green than the prior day where we gapped down and closed above that level. So it's very important to measure what happens during the day. What it is in terms of being up or down for the session doesn't matter. It's much more about where you close compared to where you open. Was there real buying or selling for the day? I would say collectively there was more buying on Monday, no doubt in my mind more selling on Tuesday, and that leaves us, what happens next if we make new lows? Look out there, obviously. Nasdaq side, not much different. Very flat for most of the session, and then did a little sell off late in the session. So hey, that's it. You don't have to talk about much more than that to know what's going on here in the market at this point. We've got, what do we have for data tomorrow? Let's take a quick look. Let me move that out of the way so I can look over here for you. We have the MBA mortgage index at 7 a.m. Eastern. We've got durable orders an hour before the bell, and crude oil inventories now in. That's it. We'll be calling it in the lab. We've been just trying to stick more to intraday patterns because anything you're going to find on the daily charts right now, A, it's going to be few and far between. B, if you get big gaps in the market, which you probably will continue to, it's going to be kind of meaningless in terms of using those charts. So we're going to do a lot more intraday. We got to stick with market direction, keep an eye on that volume, trade at the right times of day, make good solid entry points. If you don't know what a good solid entry point is and you're not making money in this environment, then you probably don't. You really need to learn to focus on it. This is what trading is about. These are great opportunity days. Not that the whole day was. Got to be patient. Wait for that move to occur late in the day. But it did, and made us a lot of money. So you got to be ready for that. We'll be around in the lab helping you make money. Charts brought to you by eSignal. Have a great session on Wednesday.